Kevin, welcome. And this is one of those situations where you say, okay, a lot's priced in now. But I think the Black Knight data said there were less than 2 million refinancing candidates left in this country. So what other options do these businesses have to pull here?
Yeah, so these businesses obviously are under a lot of pressure with higher rates. Margins are getting squeezed, volumes coming down. But you do have some offsets that aren't apparent with just mortgage origination volume. You have a lot of these companies operate mortgage servicing businesses, which actually have an extension of cash flow when mortgage rates go up and mortgage duration extends. So a couple of these names, including PennyMac Financial and Mr. Cooper Group, actually have very large servicing portfolios that are going to benefit from this type of environment with rising interest rates. We
actually spoke with Mr. Cooper, not the man, the company, about that very thing, where he was arguing similarly that, it's a better story or a better segment of the market to be in. You have an overweight with a $71 price target on them, an overweight with a $117 on PennyMac. What about loanDepot? You still have an overweight there?
Yeah, we like loanDepot primarily because of valuation, and I think the company's more efficient than it was pre-pandemic. The company did have a problem, lose money back in 2018 when the market was very competitive, similar to the way it is now. But the company, is more efficient than it was in the past, and it's pricing in some pretty dire scenarios. So I think the downside's fairly protected for longer-term investors willing to wait it out a bit.
This is maybe an off-the-wall question, but when you see this kind of decline, I always begin to wonder, is there consolidation around the corner? Are any of these consolidation candidates or buyout candidates? If so, who would be a seller? Who among these might be a buyer?
I mean, you definitely could see consolidation within the space. I think it has to happen. The mortgage market is shrinking by about 35% this year, according to our estimates, and that's likely to continue. And that's going to require a consolidation across the space. I don't see many of these like larger non-bank financials, non-bank originators selling at this point, but you could see some banks coming in to potentially buy things on the cheap, on a price to tangible book. We saw, Citizens buy Franklin American back in 2018. We saw Western Alliance purchase AmeriHome a little over a year ago for a slight premium to book value. So there's definitely, a potential, banks that may look to buy it, but it's tough to see some of these larger ones sell, particularly like Rocket, United Wholesale, or loanDepot.
Is Rocket the largest mortgage originator in the country?
Yes, it is.
I thought I'd read that recently. That's amazing.
And you have a neutral on it with a $14 price target. So where does Rocket go? I mean, they only IPO'd a year or so ago, Kevin. This is probably the worst possible environment they could have IPO'd in. And when you look at housing, we spoke with Ian Shepherdson at Pantheon about this earlier this week. He's bearish on home sales, but still thinks this is nothing like 2006, 2007, where we collapsed and took a decade to recover. Where do you think we might be in a year or two from now? And could these companies ride this out?
Yeah, I do think these companies can ride them out. I mean, Rocket is not levered. It has a very efficient and very profitable franchise. The company's produced, over a 30% return on equity for 5 years straight prior to the pandemic. They probably have the best brand in the mortgage market today. So through cycles, I mean, they're going to be a winner. It's just a matter of timing and when the market turns for a company like that.